you could live the same life that you would live if you weren't cutting by optimizing. And so I don't want to focus on financial independence and not go on lavish, exciting vacations or do exciting things. I think there's a way you can optimize everything in your life so that you can do more and kind of maximize your net fulfillment while similarly kind of playing the catch-up game to financial independence and do it all at once. I think a lot of late starters probably have had a home for a while or even a car for a while. So I think the most important thing is to make sure you're covered adequately. And I think this is a mistake I made, which hopefully can save people some time. There's kind of two steps in this process. One is make sure you have adequate coverage, and one is make sure you have the right price. And they take different amounts of time. And so don't conflate the two. I think you can have your cake and eat it too to some extent.
This is important as we get older for our audience of late starters. There's lots of people going on cruises. They're going on adventure travel. They're going to parts of the world where it's like, shit, I'm a long way from home. And I hadn't thought about doing this. I had a friend that was at the tip of South America, his father, and he did it in his early 80s, and he slipped and fell and broke his femur. He ended up getting surgery in Ushuaia down at the tip of South America. He never made it home. He got sepsis. He died far from home, and then eventually they had to get his body home. So there are things that happen, and these can be catastrophic financial events. Welcome to Catching Up to Fi, a podcast on mindset, money, and life for late starters of any age on their journey to financial independence. I'm Bill, and I'm a late starter.
I'm Becky, and I'm also a late starter, and we're your hosts. We're here to help you with your journey to financial independence, no matter where you're starting from.
We're going to talk to experts, other late starters, and explore topics related to our mission.
Join us as we catch up to Fi together.
Hello, and welcome back to Catching Up to Fi. I'm Bill Yount with my co-host Becky Heptig, and today we're talking all insurance hacks with Chris Hutchins. He's coming to us out from the Bay Area. He's got to catch a plane, so let's get through it because there's a lot of information to talk about. Becky, tell us who Chris is, please.
All right, here we go. So Chris Hutchins is an avid life hacker, financial optimizer, and host of the top-ranked podcast, All the Hacks, where he shares his quest to upgrade life without having to spend a fortune. These passions have led Chris to be featured in the documentary on financial independence, Playing with Fire, and collecting over 10 million points and miles. All the Hacks is an award-winning podcast that will teach you to upgrade your life, money, and travel, all while spending less and saving more. Chris has saved millions by breaking down every aspect of life, looking to maximize happiness at the lowest cost. I first heard Chris several years ago on the Choose FI podcast, talking about hacking different areas of your life. Then Bill and I met Chris at Podcast Movement in Denver back in August. When we heard that he could speak all things insurance, we knew we had to have him on the show. We're going to take a deep dive into the different types of insurance you should and shouldn't have and how to optimize them. And Bill, I think for our audience, this is an episode they're going to want to earmark. And when it's time to renew their own insurance, come back and listen to this, probably more than once. So Chris Hutchins, welcome to Catching Up to Fi.
Yeah, thanks for having me.
All right, Chris, you had a life before All the Hacks, and I'm a big fan of All the Hacks. Your episodes are so dense, it's hard to take notes. And one of the things you do that I think is awesome, and we'll link a lot of things in the show notes, is that you write blogs on these issues and have a newsletter that is on all these issues. And reading through that after the fact, after they listen to this episode, I think will be very important. But before we get into our hacks and your life with All the Hacks, you must have had a life before that. Take us through a little bit about your financial and professional life before you came up with All the Hacks.
Yeah, so out of college, I basically got a job in investment banking because I didn't know what I wanted to do, and I heard it was a good career. I didn't love it, and I transitioned into a career in management consulting, which I also didn't love. And then I got laid off in 2008, and I started doing some freelance work, which was not something I totally enjoyed. I didn't like the uncertainty of it. And I had this idea of like, wow, does working just suck? Like, are there not jobs that are enjoyable? Like, is this what I have to do the rest of my life? And that sent me down this kind of positive in the long run, but at the short term, like kind of sad spiral of, well, if this is life, I don't want to do this forever. So I would rather aggressively save as much money as possible so that I am not beholden to a career I don't like. Because at the time I'd had 3 or 4 that I didn't like. And so that kind of, I didn't know there was a financial independence movement, but I knew that if I saved more money now, I could not be beholden to work I didn't enjoy. And so that path continued for quite a while. And then somewhere around, I don't know, late 20s, I realized there were other people doing this and kind of got connected with a lot of people, found the Choosify podcast and realized that this was a thing people were doing. But also along that way had been fortunate to have had a few kind of small to medium-sized wins in my career. Company we built kind of got acqui-hired by Google, which really just means Google gives you a good signing bonus to go join Google. But I got a job at Google. Similarly, though, I didn't think the job was something I could do forever. So I think by the time I was 30, I'd had 5 or 6 jobs, and none of them felt like jobs I could do for my entire life. So I kind of retained that belief that I needed to save aggressively to kind of hit financial independence, and then tried a stint at venture capital, started another company, ended up working at a robo-advisor called Wealthfront. And while I was there during the pandemic, I kind of lost the ability to kind of go to dinner with friends and share all the optimizations I was making, many of which were around saving money to kind of support this financial independence journey. And so my wife and I have always loved to travel. And so the points and miles kind of deep rabbit hole I've been down in my life was really just a way to continue traveling while saving money. And so almost everything I talk about in the show, almost everything I cover, it comes from a place of, some people go down the financial independence path and say it's all about sacrifice. And my belief, or I guess the hypothesis of the entire show, is you could live the same life that you would live if you weren't cutting by optimizing. And so I don't want to focus on financial independence and not go on lavish, exciting vacations or do exciting things. I think there's a way you can optimize everything in your life so that you can do more and kind of maximize your net fulfillment while similarly kind of playing the catch-up game to financial independence and do it all at once. I think you can have your cake and eat it too, to some extent.
You're speaking my language, Chris.
Well, this is a great message for the FI audience, because usually optimization means deprivation.
Yeah.
And your optimization is maximization. So I really like that concept. And I hope we drive a lot of our audience to your show after we've talked about insurance, because you talk about all life hacks, every little bit of it. And it's amazing to me that you've saved so much money while living a maximized life.
Yeah. So I'm excited. Let's jump in.
All right, here we go. Well, let's start with one of the biggies. How about auto insurance?
Yes. So for a little bit of context, the way this whole kind of deep dive came from my perspective was, I think a lot of people don't think about renewing their policies being a time to evaluate pricing. And the cool thing about auto insurance and most insurance policies in America is that you can change your policy at any time and you actually get a refund. So even if you've prepaid for 6 months of auto insurance, if you cancel a month later, you get that money back. And so I'll cover a few quick myths that apply to multiple policies in advance, but I think everyone should at least once a year go through a quick repricing of their insurance policies just to make sure they're not overpaying. And they should also kind of put some thought into the fact that the whole idea of bundling to save money is, I won't say it's a myth, but it's not always the best deal. So for many years, I was getting a better deal getting a auto and home policy from 2 separate carriers than getting the bundled price of a auto and home policy from the same carrier, which I think some people think, oh, well, I've got my State Farm 10-year lifetime customer bundled policy discount. Why would I ever look anywhere else? And if you live in California, where a lot of carriers no longer insure homes because of the fires that have happened, yeah, you might not want to leave. I know a lot of people that can't change their home carrier because if they leave, they will not be able to get home insurance. That's a great reason not to leave. But thinking you're going to get your discount is actually the best price out there is not a reason to not explore other pricing. So that's just something I would say. The only other thing is I would do some diligence when looking around about just what other people's experience are with the carrier. I think there's everything from this carrier is awesome, they have great experience with claims, to this carrier is a nightmare. And so for me, it's not only about pricing, right? I want an experience that's not going to be hassle at a time where I'm already going to be stressed out because I'm making a claim because something happened to my home or to anything else.
Well, it would seem that doing this and optimizing, we're looking at also the time value of money. And one of the things you do with your show is you boil it down for folks. How much time did it take you to sort of look at your different policies and optimize them for savings? And was it worth the money at the end before we even get started?
It is a fair question. And if I didn't have a podcast, probably not. But I also went down, the amount of time I spent on it was more than the average person needs to. I think if you generally know what your auto policy coverage details are, which you should know, and you generally know your home policy coverage details, which you should know, you could do a couple things pretty quickly. You could use a broker or an online brokerage like a Policy Genius, and you could just fill out the details and let them come back to you with some quotes. You could go to a couple sites in the kind of band of quality you're looking at. So if it's State Farm or Geico or Progressive, fill out the online forms, maybe spend an hour. I know plenty of people who have just kind of quickly spent an hour pricing across a bunch of carriers to kind of end up saving hundreds of dollars, if not thousands of dollars a year. So I think you could do the short version. The version I did, which you can all benefit from without having to do, is I went and talked to like 4 brokers, talked to probably 5 different policies, got the full policy quotes, read through the policies, played with all the toggles, like really kind of tested everything. That is probably not worth anyone's time if you're not going to create content around it, or it's not a side passion. So I wouldn't go as deep as I am explaining I've been, but I would definitely spend some time to price out policies, just kind of quick off the cuff. Does this look like it's directionally going to be a better deal?
And I've been told by my broker that should you change policies on an annual basis, there are disadvantages to that with regards to transitioning to the new insurer. Have you seen any disadvantages with changing your policies frequently?
No, none. I mean, I remember when I was at State Farm, they told me I was getting like a customer discount for being a customer for a long time. And so I guess I would lose that, but I don't see any downside to changing policies regularly if the price is better. It's not like they're going to say, well, for customers who've been here for 3 years, we're going to actually pay out your claims. And if you're new, we're not. No, this is a very regulated industry. And some states kind of have even deeper regulations, but across the country, I don't think they're going to be able to treat you differently because you've been there longer, other than potentially some kind of longer term pricing.
Mm-hmm.
So let's circle back to auto that Becky asked about. There are a lot of moving parts. There are a lot of levers. Can you take us through the levers that a consumer has to pull in order to maximize their auto coverage, and what do they have to pay attention to?
Yeah. So when you fill out your car insurance application, I guess, at a pricing tool, one important thing is to make sure you're comparing apples to apples, because a lot of these insurance company online pricing tools are going to say, oh, well, we're going to recommend coverage. Well, it doesn't matter if one policy is cheaper than the other if the coverage isn't the same. So in general, you have your liability coverage, which is what covers you if you cause damage somewhere else. You have your comprehensive coverage, which is what happens when you're not the driver: theft, hail, vandalism, that kind of stuff. You have collision if you get into an accident. And the liability and collision are both if you get into an accident, but liability is much more about the bodily injury you might cause to someone, the damage you might cause to their property. And then you've got this uninsured, underinsured motorist, which is if you get into an accident with someone who doesn't have insurance. And then there's usually a thing for medical payments, which kind of covers the medical costs. It's usually pretty small, a couple $1,000s, maybe $10,000 at the most. And it's usually just to cover the kind of deductibles and co-pays for someone's medical bills if they get into an accident. Obviously, there are lots of extras. Some policies have pay a little extra and we guarantee you'll get a bonus payout if your car gets in a wreck. Do you want towing coverage? We could go down a long list of little things, but I think it's really important to just make sure those numbers align. So you're comparing apples to apples, and make sure they're actually what you need. One thing that I think a lot of people should be considering if you kind of cross, let's call the 6-figure net worth camp, is an umbrella policy, which would kind of sit on top of your auto and your home policies and cover your entire net worth if you had an accident. So I tell people, if you have $100,000 of coverage on your auto and you have $1 million in your investment account, bank account, and you get into a car accident and heaven forbid, someone dies, I assume that they're going to win a lawsuit against you, even for major medical damage. I mean, Bill, you've seen this in the medical world, for more than $100,000. Like if someone is paralyzed, that is a more than $100,000 cost, which if you only have $30,000 doesn't matter. But if you have $1 million, you could be for sure someone's going to come after that. So you want to make sure your coverages match what you're protecting, which is your assets. And beyond about, depending on the carrier, $250,000 to $300,000, which is usually kind of doubled, I think, for single person and the entire thing, is where the umbrella policy kicks in. So you could get an auto policy that covers more than that, but I would say once you're at that camp, you'd be better off supplementing the auto policy with an umbrella policy and just capping the auto policy at that 250, 300 level, which is usually the minimum for an umbrella policy.
All right. Well, it seems like the umbrella policies also ask you to have a certain amount of insurance with your auto insurer, and they won't insure you unless you, in some ways, not maximize it, but get to a certain level.
And that level is usually that $250,000 to $300,000 of coverage when you're kind of selecting the limits. The other big one is deductibles. This is one where I think having an emergency fund can save you some money if you kind of outsource some of the deductible to yourself. So you say, well, when I was younger and I had no money, a $250 deductible was nice, but maybe now I can afford a $1,000 deductible. And that'll have a huge impact on your savings. But you want to compare these things. So if you say, wow, now I'm ready for a $1,000 deductible, make sure you reprice your existing policy with that deductible also to make sure you're comparing things evenly.
Chris, what about the different kinds of discounts? Give us just an idea of some of the things you can ask for, because our experience was that our auto insurance carrier gave us discounts for things that we didn't think about, like a professional organization that my husband was a member of. And so we literally just started asking, what all discounts do you offer? Can you throw out a couple of examples?
Yeah, so that's one, professional associations. Some students get discounts if they have good grades. Having anti-theft devices in your car can get you a discount. In some states, not California, but insurance companies can charge less if you have good credit. So that's something to kind of look into. Some carriers give you a discount if you pay 6 months in advance instead of paying in monthly increments. They charge a fee to pay in monthly increments. I think the biggest discount that most people don't consider is how many miles they drive the car. And this is one that has a massive, massive impact on pricing. And if you're not a regular driver hitting the average, which is usually 10 to 12,000 miles a year, which is what the insurance policies are priced on, you 100% should be making sure that you're quoting your policy at how often you're actually driving your car. And so for us, that was a savings of almost, I think, 50%, because we only drove the cars for about 3,500 and 5,000 miles each, which meant that the price was significantly lower. And each year at renewal, they don't add that on. So each year at renewal, I get this letter. It's like, your policy's going up 2x. And I call up, I'm like, what happened? And then we go through it all. I'm like, oh, you think I'm still going to drive? You think I'm now going to drive 12,000? No, let's put the right number in. And boom, it drops down significantly.
Mm-hmm.
Well, this is a big number for folks that work from home, right? And they may forget to do this because their commute is zero.
Yeah, that's our thing. We both work from home. So we're driving recreationally, not to work. And so if that's the case, you absolutely need to lower that number significantly and watch how much value you'll get saved in your pricing.
Mm-hmm. And one thing that Stephen and I have experienced, we have a classic car. And rather than insure it on a regular policy, if it was a total loss, we would get next to nothing because of its age. So we have a stated value insurance policy for it. So we tell the insurance company how much we want them to insure it for. And we also tell them that it only is like less than 3,000 miles a year. And I was surprised at how inexpensive that policy was.
Wow. Yeah, I do not have a classic car, so I have not looked into that. So there's another one. That's great. And then there are some vehicles you might have where you find out, if it's an old vehicle, that having the comprehensive and collision coverage on your own car, which is optional, just doesn't make sense. So we have a Vespa, and the Vespa's value is like $500, $1,000 at this point. So to spend hundreds of dollars a year that if it gets into an accident, it'll get replaced for $800 or something, like it's just not worth it. But having liability coverage, as crazy as it seems, in case you cause an accident to someone with a Vespa, which seems much lower likelihood than with a vehicle, but and then having yourself covered, which is the big one, in case someone doesn't have insurance or something happens to you, is really important. But you might be able to self-insure an old car out of having that comprehensive coverage.
Mm-hmm.
What's funny is there are other vehicles, obviously, like a Vespa, and we had a boat. And everybody knows from the first episode that our boat was named YOLO. And the insurance for the boat was $250 a year. And this was replacement cost insurance. I hadn't really paid attention to that. And then, of course, one day we wrecked the boat. It got totaled. We didn't sink, but we were close. And it was actually the best way to disposition a boat and upsize. So we upgraded, right? We got the replacement cost. And for that, I found an older boat that was a couple of feet longer. And I'm like, this is cool. I don't need to sell and then rebuy. I just need to crash it next time.
Oh my gosh.
USAA has a perk that if you want, you pay, I can't remember how much extra it is, but they'll like boost your replacement value by 20%. And so my brother-in-law and sister-in-law had an accident during the pandemic when cars were super expensive, and it actually covered the ability for them to get a car. Like they weren't calculating the replacement cost in as fair of a way as you would imagine, right? It was one of those like, whoa, hold on. You're saying it's only worth this much? Like, and so it didn't work. They ended up getting a car that they couldn't have otherwise gotten because of that. So there are little perks like that on there. But I would say look into, if you already have towing on AAA, you probably don't need to pay the premium to get towing with your auto insurance company, and make sure you're not paying for things twice. And that's kind of it. I mean, I don't want to make it seem like you've got to go spend hours and hours and hours digging into this stuff. And in a lot of states, the pricing is very formulaic. So it's like there aren't actually as many discounts in California for a lot of people as there are in maybe some other states. It's really more about just comparing the carrier to carrier pricing because they're all pretty standard. I will just say, not all brokers have access to all carriers. And so if you only go through a broker, there are some policies that they won't price. And if you say, hey, why didn't you price Geico? And they're like, oh, we don't work with Geico. It's like, okay, well, you're going to have to price that yourself. And so I've tried some of these sites online. One has Zebra in the name, and I didn't have a lot of luck. And so at the end of the day, I had to go price things online. And unfortunately, there are some carriers, like State Farm in California, just doesn't price online. And the argument is that people can't be trusted to like actually pick the coverages they need. And I hear that, but that's also a little bit on the carrier's fault for kind of saying, oh, you could save money by getting this. It's like, well, yes, you could save money by underinsuring, but that's not necessarily the right strategy.
Right.
So it takes a little time, and you can kind of get a good sense year to year. If nothing's changed and 3 carriers were close and 2 were egregiously expensive, it's unlikely that other carrier is going to be cheaper than next year. So you could save some time and just focus on a few.
Mm-hmm.
Well, you talk about different levels of service, and that may or may not correlate to cost. There seems to be in your episode on this 3 levels of service, and there's a premium level, sort of a middle level, and a lower level. Can you give us an example which companies fall into each level and what you get for that, step up in service?
Yeah. And so I didn't really know this. So if you go through these levels, and I made these levels up, so this is probably unfair to some companies, but there are a few in the very premium camp: Pure, Chubb, Cincinnati, AIG, Nationwide Private Client. There's a lot. And a lot of those policies are targeting people at a higher net worth. They have coverages beyond what a lot of carriers will cover. So especially in places where real estate costs a lot, some carriers just haven't adjusted their pricing across the country. So a home in California that's not necessarily an absurdly expensive home relative to the cost of living in California might be too expensive to be insured by an average carrier. And so you might need to go to some of these higher tier insurance companies. They really kick in when it comes to obscure things like special coverage in certain areas, or a lot of maybe it's in the unique car camp. You have really expensive, fancy cars that kind of don't fall in the normal coverage camp, and they're very different. A lot of them have very high deductibles on home. I think one of the policies we looked at was like a $25,000 deductible for home. It's really more like a high deductible health plan where it's like, The home insurance policy is really in case something crazy happens. Like your hot water heater goes out, that's on you. And they'll insure in a lot of places that others won't. They'll write umbrella policies in much higher limits than others. But in my experience, they cost anywhere from 50 to 300% more. I've heard great things about the experience people have trying to go through claims. In some cases, it's like, before we even adjudicate this, we'll just buy you the car and like we'll figure it out later. Like those kinds of like amazing customer service experiences, but you're obviously paying for it. So that's definitely important. And then there's some nuance that I would say I'm not exactly a perfect expert on, but when you look at homeowners policies and stuff, there's these like degrees. One of them's an HO3 and one of them's an HO5 policy. And one of them says we cover everything that we don't exclude. And the other one says we cover only what's included. And so a lot of times these higher cost, more premium carriers are going to say we cover everything that's not excluded. And a lot of the cheaper ones are going to say we only cover what's included. So if something's not covered in the policy, let's take for an example, we were looking at trampoline and we were like, do we get a trampoline in our backyard for our kids? And there's a lot of reasons not to. And someone said, make sure your insurance policy covers it. It's like, okay, well, if you have a policy that covers everything that isn't excluded, and you don't see trampoline, you can feel good. If you have a policy that only covers what's included and you don't see trampoline, then you're probably not covered. And so that was just like one example of the type of policy and reading through it. But I'd say if you also just look at consumer reports, you can get some kind of feedback. And then there's kind of this middle ground of Travelers, Safeco, USAA, Amica. They're kind of like more premium carriers. And then there's just the standard carriers, Geico, Progressive, kind of all of these other ones. None of them, I think, are not going to cover you. I think it's just how much hassle could it be? And I had Geico for many years. I didn't think there was going to be a lot of hassle, but they don't fall into the camp of like a premium carrier. But I like looking at the consumer reports data just to see like what the overall feedback is. And USAA consistently has really great feedback. And if you're eligible for USAA, which requires that someone in your kind of line of your lineage has served in the military and has opened an account at USAA while they were alive. And so if you're not a member of USAA, but your grandfather was in the military and is still alive, even if they weren't a USAA member, they can become one now. Then your parents could come one, and then you can. So I always tell people like USAA for us was the best price, and I'm glad we're members. But even if it might not be the best price now, if anyone in your kind of living family history is in the military, might as well ask them to open an account. It's free. They can open an account. Then you can kind of make sure that you have that option in the future.
And Chris, I will say USAA goes down and sideways. It doesn't go backwards. Our son is military and we can't do it. So it does not go back.
Okay. Well, I'm sorry. It's been.
Yeah, that's okay. That's all right. A lot of people assume that we are eligible for USAA, but it doesn't work that way. So siblings and down, it does.
I was with USAA for a bundled coverage, and I found it to be excellent coverage. There was sort of a lot of no questions asked. They took care of you. It was seamless. It was quick, but then it was more expensive. And when I repriced it, we exited USAA. I could see us going back eventually because I loved the service. Did you say you were USAA for your policies?
Yeah, but our situation is a little bit unique because we have an au pair and she's from Italy and she's 24 and she's been driving for 1 year. And every carrier prices that completely differently. So some carriers treat her as someone who's never driven before. Some carriers treat her as someone who's driven for 1 year. Some carriers just say she's 24. We don't care how much she's driven for. And so the variability in the cost of adding her by carrier was probably about $2,000 a year. And so for some carriers, it was like maybe it costs $1,000 to add her, and others it costs $3,000 to add her. So I think whichever carrier prices an international, less experienced young driver the lowest is going to be the best carrier for us, regardless of how much they would charge otherwise. It makes up for any difference. So I don't know if USA is the most expensive if we didn't have an au pair, but with an au pair, it's hands down the cheapest.
Let's circle back for a minute to umbrella policies, because I think that that's one that is often forgotten. People think that they have auto and property and homeowners covered, and they're like, oh, I'm good. I don't need anything else. You talked about potentially insuring your net worth. Is that a number that you would use? Does that max out? What number do you use, and how much is the cost? Because people don't realize that it's pretty cheap, right?
Yeah, so umbrella coverage is a lot less expensive than I thought. I think the first million of coverage probably costs you a couple $100 a year. And so I don't know if you necessarily have to cover your entire net worth. I think there's arguments that you should, and then there's arguments that 5 million is enough, and once your net worth exceeds that, you're probably fine. Some people would say 10. I mean, at the end of the day, it really just comes down to, if there is a situation where you are sued, what does the court cap out the value of that judgment at? And so there's not a written answer, right? It comes down to the courts. But there have not been that many examples of people getting sued for auto and home liability accidents and getting judgments in the $10+ million. It's happened, but it's very, very rare. And so I'm not going to tell anyone what they should do, but I think the first $5 million of net worth, in my personal opinion, is something that I have always thought would be good to cover. After that, the risk of not covering it, I think, goes down significantly. And then after 10 million, I think the risk goes down a lot more. And then beyond that, I don't know. It seems so far away. I haven't really had to think about it.
And one of the things people forget about too is renter's insurance. You don't have to be a homeowner to have liability issues. Can you take us through sort of some of the same issues for renter's insurance and why it's so important?
Yeah, I mean, it's a bit of the same. So when you live in a home, whether you own it or not, you're liable for kind of two things. What happens if the home has a problem, right? Like if your home burns down, you're not liable, but it's going to be a big impact on your life. If you rent a home, you're not responsible if the home burns down for that cost. But if something happens in the home, someone slips on the stairs, falls and hurts themselves, you break something and it leaks through to another home, like that liability is something you've got to protect. It's kind of like within the walls of the property, whether you're an owner or a renter. Renter's insurance, because you're not covering the actual property, ends up being a lot less expensive. But both are things you need. And similarly, I think everyone thinks, oh, well, if my friend slips on the front steps, they're not going to sue me. It's like, well, no, they might not, but their medical insurance company might, because their medical insurance company would rather someone else pay the bills than them. And so it might be completely out of their hands. And so on top of that, there's policies that cover natural disasters that aren't included depending on where you live. So in California, earthquakes are not something that's covered. So if you want to protect yourself against earthquakes, you need a separate policy. In other places, there might be separate hurricane policies and stuff like that. But yeah, renters and homeowners, you both need, unless you want to self-insure, which can be potentially quite expensive. And you need the same similar limits. You want to make sure the liability limits of those go up to the minimum requirement from your umbrella policy, so there's no gap. And generally, adding up to that limit and adding umbrella, it's not that expensive. These things are quite rare. But if you've worked hard to save $1 million, you don't want some accident being the thing that depletes your entire net worth. And in some states, it's actually possible to sue people for their future earnings. So you might want to think about, okay, I've got $1 million. Is it worth an extra $100 to cover up to $2 million? So that one, I don't have to think about changing this as I save a little more. And two, I don't have to think about protecting kind of future income that someone could kind of sue against. I'm not even an expert enough to know which states allow those things, but I think leaving a little bit of ceiling room there is important.
One of the things that comes to mind for me with this is my kids have no net worth, essentially. One's still a student and one's newly employed, and they both have renter's insurance. And this is something I never thought of when I was a poor student or early employee. How important is it for them still to have umbrella insurance? And for me, why didn't the mortgage broker, not the mortgage broker, but the insurance broker not recommend that? Because you still have some of the same liability, even though you have no major income or net worth, right?
Yeah, I mean, you have the liability, but look, I'm not saying it would be a fun situation to be a student and have no money and get sued for the little money you have, but the risk is a lot lower, at least, if that makes sense.
Yeah, but I'm still wondering whether or not they should have that as well at some entry level, or we'll have to find out what is even possible, or if they would be considered to be insurable at that stage of life. I didn't think about it until really I owned a home.
Yeah. I mean, most people aren't thinking about all of these limits. And that's, I think, one of the biggest things is you set up a policy when you buy a car, you set up a policy when you buy a home, and a lot of people never look back at that. They just keep renew and renew and renew. And if your life changes, that's a reason to change things, right? If your driving habits change, that's a reason to change things. On the home, if your home appreciates, is another important one. A lot of people I know buy a home, insure it for the cost of the home, and then 5 years later, they haven't updated it, but their homes have appreciated significantly. That's a reason to also increase your limits, because the insurance policy isn't going to say, oh, I'm so sorry, your home's worth more. Well, let us cover the difference. No, they're just going to cover whatever you insured it for. And so there are things you can add on that are kind of extended reconstruction benefits that add a little bit of a boost in case it costs more at a certain time, usually 20 to 100% extra. But it is not something that I would want to rely on. I would want to make sure I have enough coverage and let that extended reconstruction be a buffer. So if you know your house is appreciated, I would increase that. But there are other coverages when it comes to a home that are worth looking into. Like there's a loss of use coverage, which you can say, how much coverage do I need in case I can't live in my home? And obviously all of these things are for the small chance that something major happens. But if you have a ton of family nearby, and it would be totally easy to go live with family for 6 months if something happened, then you don't probably need as much loss of use coverage as if you have no one nearby. And if you lost the ability to live in your home, like for 6 months, you would have nowhere to go. And so some of those things are worth considering your personal circumstances and how much that matters. Similar discount stuff applies to home. There's a lot of discounts that might be related to having alarms or fire sprinklers or an organization you're part of, or a lot of the military related insurers like USAA sometimes have things. And then the only thing that I'll say about home insurance that's annoying is they have all these quizzes that you have to fill out. And I've gotten very quick at doing them, but it's just the most frustrating thing because I know how much I want to insure my home for. I'm trying to compare quotes, and a lot of these companies will only let you go through and like say, well, what kind of roof material do you have? How many rooms? Do you have a fireplace? How many fireplaces do you have? And you got to go through these questions. They don't really affect that. What they do is they affect a minimum amount of coverage you have. So a little hack that I wouldn't recommend doing if you pick this carrier, but if you just answer the questions whatever you want and then raise the limit, you'll get the price. And so if you're trying to get through this quickly just to see is this carrier comparable, you probably don't need to answer all those questions perfectly just to get the quote for what does $800,000 of coverage cost. But if you decide you want to go with that carrier, I would 100% go back and refill it out correctly just so that all the right information's on file.
Mm. So, Chris, how do we go about insuring our home? Let's say that we bought it 10 years ago for $350,000 and today it's worth $800,000.
Yeah.
And then I know that in some parts of the country, construction costs are maybe $200 a foot, and in other places they're $1,000 a foot. So, how do we protect ourselves for if our home is a complete loss?
Yeah, so this was a tough one because if you say, "Oh, my home's worth $850,000," some of that's the land, right? And so the good news is, if your home burns down, like you still get to keep the land, and it still retains most of its value. There's probably some debris removal and that kind of stuff cost. So what you're really trying to figure out is what is the cost to remove everything if something happened and rebuild the house, plus a little bit of buffer. I think one way you could try to compare that is, okay, let's look at what a teardown costs for a similar lot size nearby, and what does a brand new house cost, and that margin is probably one approximation. You could probably call a builder and just ask anyone that nearby that's kind of rebuilt or remodeled, like what is the cost to build in this part of town, and kind of come up with that. The insurance company is going to give you an estimate. Some of them might even send an appraiser out to figure it out. But I don't have a perfect answer here. I think I would love to know how much is the right amount. I think that extended reconstruction benefit is what gave me the comfort of not being perfect here. I added on 50%. So let's say you think your home's worth about $850,000, but you looked at a teardown and people are selling teardowns in the neighborhood for $300,000. So you're like, well, maybe about $550,000 is what it cost to build this house again. Asked some neighbors and some friends, and they said, well, maybe about 600. And you're like, okay, I'm not sure, but 550, 600, somewhere in there. So you pick 550, you add 50% extended reconstruction. It'll cover you to like 780 or whatever 1.5 times 550 is, and you'll probably feel pretty good about the delta there. So with extended reconstruction, you don't have to get the math perfect because you've got that buffer in case you're off. If you don't add that, then I just err on the high side, and I'd probably go like 650 just to be sure. Because also you don't want to have to be like, oh no, I heard real costs are going up 5% now. I've got to reprice my insurance. For me, the extra cost to go 5, 10, 30, even like 20, 30% higher with extended reconstruction or not, like it's not worth the hassle of kind of constantly repricing. So it's probably not going to go up 30% this year. So maybe you say, let's add 5 or 10%, make sure I'm covered for that. Make sure there's a little bit of buffer if I'm wrong, and kind of stop worrying.
Can you insure your house for replacement cost and not have to figure out, I mean, will insurers write policies that just say, we'll replace your house?
I have not found one. I think some of the higher ones might just do the appraisal for you and say they'll do the replacement cost. But no, like you have to pick a dollar amount. And like USAA's dollar amount they gave me was about 30% less than the dollar amount I chose. And that's another really important thing. I would not trust what the insurance company tells you. In my case, I was very surprised at how low that insurance company amount was. The only thing that I loved about it was, here's another hack that's a little bit separate from insurance, is that in a lot of states, you can appeal your property tax appraisal, your property appraisal value. And so one of the supporting evidences that I have is, well, no, USAA came and appraised my home and they said it's only worth this much. So how could you possibly say that a property tax value is this much? Clearly, it's not worth that much. So it was nice to have a data point that my home was worth less, but I certainly overinsured it over what they appraised it at.
So I want to make sure that I'm understanding this correctly. In the example you were giving just now, you were talking about a home that was worth $850, but you're talking about insuring it for like $600. So you're insuring the home for less than what its market value is?
Oh, definitely. Yeah, my home's insured for much less than the market value because it's not the cost. Like the land in our neighborhood is probably worth 50% of the cost of the home. And so you get to keep the land if the home burns down. So if you bought $1 million home, I wouldn't expect you to insure it for $1 million because there's a value for the land that it sits on. Now, if you're in a condo and you don't own the land the home is on, and you might be insuring it for exactly what it costs to buy that condo. But if you have a 1,000-acre, like gigantic area and you've got a small little house on it, we could all agree that if that house burned down, the land would not lose all of its value. So I'd say what you're insuring is the cost to build and reconstruct the home if the home is gone. And so you want to look at what's the delta between what that land would be worth if it burned down. And so there's a house selling down the block from us for about half of what our house would sell for. And it's a total teardown. Like I am 100% sure that whoever buys this home will tear it down and rebuild something. And so if they insured it for the full amount, that would be crazy. So if you look and you say, I bought a home for $1 million and I'm insuring it for $1 million, like maybe it's the best way to save money is to realize that maybe you could insure it for less, assuming you've kind of done the comps to make sure that land and wherever you live is worth something.
Okay.
Well, it seems like a lot of the burden of this increase is on the homeowner. Is there any kind of cost of housing adjustment where your insurer can help you with this so that you're covered, even though you may not think about it?
No, we had a home in San Francisco and it probably doubled in value. And I never once got a call from the insurance company to say, hey, property values have gone up. Want to increase your coverage? No, nothing. It was 100% on me. And I would be surprised if most people in a rapidly rising home price area weren't underinsured.
Something else that I wanted to mention is I think a lot of people who have mortgages on their home and they have escrow, and the escrow accounts are paying the insurance bill, correct?
I know that is a thing that happens. It's something I've never experienced personally.
Okay. Well, we don't have a mortgage right now, but in the past we did. And when we had escrow, your property taxes and your homeowner's insurance comes out of the escrow. And that causes people to not think about it. The insurance policy just renews. And they may not even look at it because they're not physically paying the bills. So I want to make sure that people understand if their insurance is inside their escrow account, you have the ability to do what we're talking about here. Research it, find your own policy, change policies and carriers if you need to, and you research the best price. And then you'll need to communicate with the mortgage company that you've changed policies. But don't let your policy just sit there and renew year after year after year without questioning it.
Yeah, I 100% agree.
So we have a few more things we need to talk about before we let you catch your plane. And one of the things that you talk about in your life hacks is life insurance. And this is a big one for physicians because we get sold policies. We get sold whole life, universal life, and variable life. And I made this mistake. Take us through the different types of life insurance and what do we want to buy and why?
I don't even know if it is worth our time to go through all of the ones that you shouldn't buy. There's always a new name for it also, by the way. This whole infinite banking thing is quite popular. I've had lots of people push to come on my show to talk about some of the ways, I think it's like variable universe, indexed universal life and variable. There's all these terms. The only life insurance policy that I've run the numbers on and felt like is a worthwhile policy is term life. And I got really excited and intrigued about this kind of crazy life insurance policy that allowed you to kind of bank for yourself. And there's been a lot of pitches even in the financial independence world for like, oh, well, when you have this policy, you can borrow from yourself and you pay yourself interest and it ends up being this great thing and you're not throwing any money away. But at the end of the day, if you factor in the fees and the costs, you would have been better off just putting money in an index fund for all the investing. So I personally think that separate your investing and your insurance, and that every policy I've personally looked at, which is a few, not zero, I have found that creating my own version of investing and insuring would perform better. And not because I'm some secret amazing investor, right? I'm just buying index funds. Like I'm not doing anything fancy. It's just, I think that has always proven to be the better outcome. I'm always open to someone to prove me wrong, but in the models I've built and the hours I've spent debating this, I have never found any circumstance where that was not the case personally. And term life is just insurance, right? You are insuring against your death, sad as it may be, and if you don't die within the term of the policy, you get nothing back. But it's significantly cheaper than universal life and whole life and all these other kind of investment-based life insurance policies. The only caveat I will say is I have a friend who was able to create a life insurance company that kind of functioned like a universal life policy, and he felt like it was a better deal, but he was kind of close to the 100 million net worth. So if you're past $20-30 million net worth and you're creating insurance companies on your own, like maybe there's something there. But I think for most people listening, term life is the type of policy they would be looking at, which is something to basically provide anyone that survives you, whether it's a spouse or children, with some amount of money that probably is going to replace the fact that you don't have an income. So if you're retired, this might not be necessary because there's not an income to replace that was providing for someone else. Or if you're not married and have no kids, it's probably not something you need. If you're married and your spouse works and you have no kids and you rent and it would be pretty easy for your spouse to not have as big of a place, maybe you don't need a term policy, or maybe you don't need that much of a term policy. It's a very personal question that's very dependent on your family situation and your savings. But what's not dependent on that is that I have not found a non-term life policy that makes sense in all of my research. I would love to find some cool policy that's a permanent life insurance policy that saves money and has all these tax advantages and hacks. I would love it. That's why I keep looking at them. I just don't think they exist.
Mm-hmm.
Yeah, I mean, people forget that there's a lot that you have to account for in figuring out the amount of your term. And the other thing they forget is that you can ladder these policies because your needs that you have at 30 aren't the same needs as your net worth increases at 40 and 50. So tell us about laddering.
Yeah, I think you just said as your net worth increases. So I think there's two things at play here. One is the more money you have in savings, the less money you probably need to have an insurance policy cover, assuming you're not equally creating expenses that will last forever. Like if you're constantly buying more homes and nicer things that have payments, maybe you do need more insurance as you make more money. But the other thing is the things you're often insuring, which is very often your children. If you get a policy when your kids are 1 or 2, they have their whole children, I don't know, non-adult lives, their child lives ahead of them. And you might need 20 years of expenses, and you might need to cover lots of stuff. But by the time they're 25, hopefully, they're not costing as much on your expense flow each month. And so what you can do is you can say, okay, well, I could insure, my kids are 10. I want a policy both to help my spouse cover the costs of the home and living if I wasn't here, but also the kids. But the kids are going to be out in 15 years. So you could get a 30-year term life policy for $1 million and a 15-year term policy for another $1 million, or for $250K each. It doesn't really, the numbers are irrelevant, but you don't need to cover the full amount for the full term. And so some sophisticated kind of, it's not even that sophisticated. I guess I'm maybe making it seem crazier. It's like, well, you could get a 10, 20, and 30-year policy for $250K each. For the next 10 years, you'd have $750,000 of coverage. For the next 10 years after that, you'd have 500. And for the last 10 years, you'd have 250, and then it would go away. So yeah, I got this great quote that I wrote down where someone said, I work for a big whole life company, and I don't recommend whole life to the average person. He said, it has some unique qualities for wealthy folks for estate planning, but it's not really a good choice for financial security. And this is coming from a person that works at a company that sells it.
Well, the thing that people forget too is you got to cover a spousal income, because if you do have kids and they can't work because they're busy raising the kids, you don't just cover your own income, you cover the income of functionally that person is retired, and you got to cover it through potentially their entire remainder of their life in retirement. So there's a lot of things that go into this calculation. Do you know of any calculators that include these variables where you can check a box and say this? Is there a hack where you can help yourself figure out and make sure you pay attention to all the variables that are involved?
I have not found a great calculator. I remember playing on Policy Genius. They had a calculator, but one of the biggest problems I have with a lot of these calculators is they assume that what you do now will be what you do later. So it's like, how much money do you spend? What's your salary? How much money do you have? Okay, that's what we should do. Well, that's not necessarily the case. Like, if I weren't here and I'm the only one working, let's say in this hypothetical example, if I'm the only employed person of me and my spouse, and I were to die, and what is my wife going to do? Well, she might not need to live in a very high cost of living place to raise the kids. Maybe we want enough insurance so she can, but that's the question you have to have with your family. It's, what changes would we want to make? And let's insure against what we need for the changes we'd make. And then I would add a little bit of buffer because those changes take time, right? Even if you decide if something were to happen to one of us, we would move out of this high cost of living place, move to a smaller home. You're not going to do it overnight. So yeah, the good news is it can be quite inexpensive. So depending on how old you are when you get it, how long the policy is, you can get a term life policy in good health for, I think, about $1 million for about $1 a day, I think is probably the kind of floor of the cost. So similar to umbrella coverage, it's not that expensive. Obviously, all these different expenses can add up and stack up, and it costs money. But I think some people that have been pitched on a lot of these less advantaged policies that cost a lot more because they're investment vehicles and retirement savings and all this stuff, look at term policies and say, wow, they're a lot less expensive than I thought. So term for sale, term4sale.com is one site that you can go to kind of compare these. You can't shop through that site, but you can compare what the costs will generally be. And then depending on your age and your health and the amount of coverage you want, you may or may not also need like a doctor's exam and that kind of stuff. And all your prescription history, you get that gets shared. So just know that whatever pricing you see may be different if you have different health conditions.
Yeah, and you got to remember too that one of the costs of having kids is paying for their college. So that's a significant thing. It's a future debt. You don't need to think of just present debts, but the future debts. And essentially, a term policy is a huge sinking fund for all the future debts that you'll have, and you've got to plan for that as well as for inflation, I guess, too, right?
Yeah, I don't think these policies are indexed for inflation. So that's actually a great question. I've never really thought about that, but I assume they are not. I assume that would be a huge marketing point if they were. So yeah, the good news is that the term life policies are usually tax-free. So that's one perk there.
Cool.
Yeah.
Cool.
Well,
Definitely
we don't
something.
just have kids, we have pets. And this is an important one for me because I have 2 dogs, and we lost a dog to a medical condition that took a week to figure out and realize that we had to let the dog go. And we were in a pet ICU. And people have pets with chemotherapy, and they do amazing surgeries, and they have cardiologists that do echocardiograms. People don't think about all the costs that are potential for a pet, much like a kid, and we didn't have pet insurance, and we didn't have a sinking fund for our pets, and the cost of a week in the doggy ICU and transfusions for this dog was like $7,000 to $10,000. It is not insignificant. What do you recommend?
Yeah, we had an issue with our dog, and we spent $1,000 to try to diagnose an issue. And then they were like, the end result was like, we don't think there's anything wrong. So pets can be expensive. This is a very, very personal thing. I think that in our society, I think if your kid were sick, no one would make the decision of, well, the medical treatment is too expensive. Like, let's just, there's nothing we can do. But you have to ask yourself how you would handle these situations with your pet. And if you're sitting in a situation saying, wow, I would spend $600,000 to save my dog no matter what, like that is how I feel about this, probably a good person to get pet insurance. It can be $15 to $100 a month, but it varies so much on the age, the breed, the species. Unlike human health insurance, pre-existing conditions are usually not covered. So getting this early is definitely something to consider if you're the kind of person that doesn't have the means but would do anything, take on credit card debt or whatever to kind of cover these costs. And so I think you have to ask yourself what you would do in these situations and decide if pet insurance is right for you. This is one where I don't have a perfect answer, but I will say also keep in mind, it is typically a reimbursement style insurance. So even if you have pet insurance, that doesn't mean that the $10,000 cost isn't something you're gonna have to put on your credit card and ask the insurance company to pay you back for. So I would say reading the fine print when it comes to these situations is extra important because you're the one who's probably going to pay for it and hope you can get reimbursed.
Yeah, as you mentioned, you really need to decide here, as opposed to in human health insurance, what the cost of this pet life is. What are you willing to spend before you look at this is not worth it?
I know
So
it's a very
you're
strange
deciding.
question to have. No one wants to think about that question, but it's a reality.
Mm-hmm.
Yep.
Yep. Yep.
Well, I want to get to travel insurance, and we're coming close to time, and I know you don't want to miss your plane. One of the things you also touch on is disability, and we can probably add this to a health insurance episode. But can you tell us the importance of this? People don't think of it, and then a little bit the difference between short term and long term.
And you're talking about disability insurance. Okay. So I will say that disability insurance and long-term care especially are important things that I am not as well versed on. And so I would encourage you guys to find someone to talk about long-term care if that's a topic people want to cover. Disability insurance, I think, is something that a lot of us don't think about at all, but there are many jobs that disabilities would completely make impossible to do. And certain disabilities would make almost any job impossible. And so the short-term disability usually covers you for up to 6 months. A lot of employers include this. And it's something that I would say some states also actually include this as part of a state fund. I know in California we do. The maximums of them, the caps of them are very dependent. So if you're a high earner, just because there's a fund, it doesn't mean it might cover how much you spend. So that's something. This, I think, is something where 3 to 6 months short-term disability, if you don't already have it, I would probably be telling you that you should prioritize an emergency fund first because that can cover a lot of things versus buying short-term disability insurance. And a lot of employers need to have this for you. Unless you're financially independent, you probably can't self-insure against long-term disability. So if you don't have a policy through work and you rely on your work income, it's something you probably should look at or at least look at a supplemental policy. I don't have a ton of experience here, so I'm going to leave that there. There's also, for context, the Social Security, disability insurance, and supplemental security insurance. There are programs like that to look into related to Social Security if you become disabled before retirement. I'll leave this as one that I'll put on people's radars to do a little more research on, because it's so dependent on the circumstance you have, the job you have, and all of that.
But I will add, though, that it is very important, and I think it's something that people don't think about. I have a family member that is at this moment applying for long-term disability, and he's not an old person. So it's something that applies to everyone, even when you're young. And I think that folks just don't think about it. But if something were to happen to you and you couldn't work, then you've got a big problem in front of you.
Yeah, and you're insuring your human capital. I mean, we all have a potential lifetime human capital, and you need to still save for retirement. This may not cover that, and I think it's tax free. But if you don't have enough, your standard of living can certainly decrease. And if you're a single earner family, this is as important, if not more important, than robust life insurance. But they're both incredibly important and do different things. We'll try and cover it on a different episode. I want to cover travel insurance before we finish, because we're getting ready to go on a trip to Morocco for my wife's 60th birthday. And we're going to be in the desert. We're going to be off grid, away from a lot of healthcare. And one of the things, travel insurance can do a bunch of different things, but the part I'm really interested in, and I did not think of in my youth, or even as we got more adventurous with trips, and we went to the tip of South America, I did not think of this. I've had two friends that had significant issues. One was in a first world country in Italy and perforated his colon and needed surgery, but he didn't want to do it in that country. He wanted to be home because there's a recovery period you have to think about too. And it's not just dealing with the acute issue. You're going to be stuck there and potentially in dealing with this until you're able to travel home. You could get COVID and nobody lets you on a plane. So in my case, tell us a little bit about what it can do. But in reality, for me, how the heck do I get out of a country where I absolutely don't want medical care?
Yeah. So travel insurance is an interesting one, because depending on how you booked your trip and what credit cards you have, you may already have some of this coverage and you may have none of it. And there are certain things that different policies cover and don't cover. The things that I typically don't worry about, because I am often covered by a credit card, are things like delayed bags, lost bags, trip delays, cancellations, that kind of stuff. With the right card, kind of rental car collision. And I'll just flag one quick thing on rental cars, which is there's, like we talked about earlier with auto insurance, there's two components. There's kind of the liability of what happens and then damaging the car. And a lot of credit cards will cover, you hear, oh, I'll put it on my credit card, it covers my rental car. It's only covering the damage. It is not covering the liability. Usually your personal policy covers the liability, but if you don't own a car, you don't have a liability policy, and you might be completely not insured there if you aren't planning this correctly. So I did a whole episode that maybe you could link to on rental cars. So if people want to go deep on rental cars, saving money, getting the best deals, getting the right coverage, there's a whole episode there. But I just flagged that because a lot of people think that they're completely covered and they might not be. The one you're talking about is kind of medical evacuation and emergency medical treatment. And it really, really varies by policy. So I know that if you hold an Amex Platinum card, whether you booked a trip on your Platinum card or not, you have emergency evacuation insurance. But what that emergency evacuation insurance covers may be very different. And so I know that during the pandemic, there was a company called Kovac Global that when we were, my dad was recovering from cancer, and he was like, I don't know what's going to happen to my health, but if I get COVID overseas, I do not want to be treated locally. And so that was not going to be covered by the kind of emergency evacuation credit card policy. So he got a separate policy that was a few $100s for his trip that no matter what would fly him home. And so I think the thing people are primarily thinking, wow, I'm in the middle of the jungle and I need to get a helicopter and a plane to go to a hospital. They're probably going to be covered if they have that emergency evacuation insurance, but it might not cover, I'm going to get you back to your home country. So if you want the certainty of being able to be treated in your home country, obviously better than I do, there are some things that could happen where you want to be treated as fast as possible. And there are some things where, well, it could wait and you could get home if you wanted. If you want to be able to go home, you might need a supplemental policy for that. But if you don't have a credit card that covers emergency evacuation, especially if you're going somewhere where you might be a little bit off the grid, it's something you should probably consider adding to before you take the trip. And there are a lot of travel insurance companies. I've used a policy from Trove. I have no affiliation with them before. I've used a policy from World Nomads. No affiliation there in the past. Other things to be keeping in mind are some adventure activities aren't covered by all policies. So World Nomads has a policy that'll cover things like scuba diving and rock climbing that aren't often covered by every policy. And then some also have coverage for, and this is a time where I'd really consider it, is if you're trying to connect to like a cruise. So the specific example I have is I have a friend who was supposed to take a Galapagos cruise and they got COVID and they were delayed. And so he missed the Galapagos cruise. Well, like that's a really big bummer, but the Galapagos Cruise Company doesn't actually, like, they're not going to lose money because of something that happened to you. Or even if you missed a flight, forget COVID now that kind of we're not testing before flying. If you miss a flight and you miss the cruise and you can't board it, that's not the cruise lines company fault. So you're going to want to, if you have anything like that where arriving a day late because of some flight error is going to cause you significant financial cost, I would definitely look at insuring that.
Chris, is that the kind of thing that would be covered on your credit card?
I do not think that would be covered on your credit card.
Missing a cruise because of a flight delay?
Yeah, I do not think that would be covered. I would think you'd need a supplemental policy for that. They might cover you for a night's hotel if something went wrong. And the airline would too, right? If the airline misconnected you and we'll get you there the next day. We'll maybe get you some toiletries or something like that. But they're not going to say, and we're going to pay $15,000 for your cruise that you missed because of this. Definitely not. And so anytime you have kind of some expensive thing that you're doing, I would look to have a policy to cover that. And the other thing to consider is they have kind of cancel for any reason insurance. So yes, the airlines are great now, and most flights can be canceled and get a credit. And hotels often can be canceled, but sometimes they're kind of, you lose a deposit or something. There are insurance policies that will cover the cost of your trip if you choose to cancel for any reason, not just you get sick or have some problem like is common, but you can add on the cancel for any reason coverage. And it's like, I don't want to go on this trip, and you get your money back. Usually you only get about 70% of the money back, and the policies are more expensive because they're kind of at your discretion. But if you have a really expensive trip that you think you might cancel, and the reason it might cancel is not kind of a typical covered reason like a medical emergency, I would definitely look at cancel for any reason insurance. In your case, Bill, you got to ask yourself, are you okay getting medical treatment abroad? And if not, then I would be spending a couple $100 for kind of an emergency evacuation policy that's separate. Or if you don't have a credit card that covers it, then I would also be looking at that.
I had heard, and I don't know this for a fact, but I had heard that the evacuation coverage from your credit card, that you have to book the evacuation, like you have to call that credit card company, say, I need a medical evac, and that they book it. Is that, do you know if that's
I would
true?
not go and book a $250,000 private jet to take you home and then call Amex and say, hey guys, like, here's my receipt. I would absolutely call the number. They all have a 24, like I'm looking at the Amex terms right now. They have a 24/7 toll-free and collect phone number that you can call. And it says you must be an Amex card member. Your trip must have originated from your U.S. billing address within the past 90 days. And you must be traveling more than 100 miles from your address. We cannot provide any services to the extent payment for such services would expose us to any sanction. So I guess if you're traveling into Syria or Iran or Cuba or North Korea, you're kind of out of luck there. But yes, I would 100% be making sure you had this if you're traveling anywhere like that you might.
Yeah, it's as important as we get older for our audience of late starters. There's lots of people going on cruises. They're going on adventure travel. They're going to parts of the world where it's like, shit, I'm a long way from home. And I hadn't thought about doing this. I had a friend that was at the tip of South America, his father, and he did it in his, early age, and he slipped and fell and broke his femur. He ended up getting surgery in Ushuaia down at the tip of South America. He never made it home. He got sepsis. He died far from home. And then Eventually, they had to get his body home. So there are things that happen, and these can be catastrophic financial events, much like a one-time thing. And you can't really plan for this with a sinking fund at all. These are life-altering, financially altering events. And I thought I was immortal earlier in my travels, and I'm not immortal anymore. And this becomes more and more important. It's an episodic thing where you think all you got to do is figure out the logistics of the trip and the flight, and maybe cover, losing out on the costs of the trip. But it's not just that. These are things that are as important as life insurance, as important as disability insurance to your financial health. Well, we've covered a lot of hacks. This has been great, and we want to value your time. There's so much more to this, and you've written articles on this. We'll link them in the show notes so that people can review those. They don't have to take notes because you've taken notes for them, and we appreciate that. We want to direct people to your platform. I listen to all the hacks religiously. These are really well-researched episodes, very dense with material, but you do cover them elsewhere on your platform, and your platform is fantastic. Are there any final thoughts you might have for late starters in particular with regards to insurance, or anything you can think of that late starters might need to think of that we wouldn't normally?
I think a lot of late starters probably have had a home for a while or even a car for a while. So I think the most important thing is to make sure you're covered adequately. And I think this is a mistake I made, which hopefully can save people some time. There's kind of two steps in this process. One is make sure you have adequate coverage, and one is make sure you have the right price. And they take different amounts of time. And so don't conflate the two. So one thing I did, which I think was a mistake, was I said, wow, our home is underinsured and I want the best price. So instead of just calling our current insurance company, increasing the coverage, and then at some later date deciding I wanted to go through the work of repricing everything, I treated them like one project. And the amount of work it took to do all the research and figure it all out was something that I kept putting off and putting off. And so I wasn't adequately covered in that interim period. So I would separate the two things, and especially with how easy it is to cancel a policy and get back a refund. And I would say, if you listen to this and said, wow, I could probably save some money by lowering the amount of miles I need, or I'm probably underinsured and need an umbrella policy, I would encourage you to either say, great, let's go price everything today and change policies. But if you don't feel like it's right to do that right now, that's fine. But I would, at a minimum, go update your existing policies today so that you're adequately covered now, and not feel like you have to do both of those projects at the same time. Because I imagine if you've owned a home for a little bit, you might be underinsured and you might be wanting to save some money. And so, yeah, do both. But don't do both if it's going to take a while. Do the most important one first, and let the other one come whenever you have time for it.
Awesome advice, and a great way to close. Becky, do you have any final thoughts?
Oh, I think this episode is great. There's even other aspects that we didn't have time to talk about, but I hope that everybody goes to your podcast. And Chris, tell us the website name.
Yeah, All the Hacks. Wherever you're listening to podcasts, you can find it. allthehacks.com. Newsletter sign up is there as well. I try to make it easy to find me anywhere with that term. I feel bad for anyone who wants to try to do anything related to All the Hacks, because I think we've kind of dominated the search results. It's great.
Well, that's awesome. Thank you for your time today. We really appreciate it. Actually, we look forward to having you back on the show, because your knowledge is vast, and we have other insurance we need to talk about, and then other hacks. I mean, your platform is great because we do want to hack life for the optimization of life, but not just to frugal down. We want to maximize the fun in life, in our life experience. And your platform helps us do that. Thanks again for being with us here today.
Thanks for having me.
We hope you've enjoyed this episode of Catching Up to 5. We would appreciate it if you could leave a 5-star review so that our message can reach others.
We are not lawyers, financial advisors, accountants, or tax experts. Please consult your own professional advisors before making any important decisions. Our content is for entertainment and education purposes only.
We'll see you next time on Catching Up to 5.